So very good morning to all our listeners. Hope you had a great evening, and hello to our North American listeners. All the volumes in the various asset classes continue to be very thin, even more so today given the real lack of Tier 1 data from the US session. Many participants likely to be sitting on the sidelines given the fact that we have, one, the FOMC minutes due for release tomorrow, and then secondly, Benjamin Bernanke speaking in Jackson Hole, one of the key speeches that he'll make this year. That's due at the end of the month on the 31st of August. In terms of the European markets, again, a real lack of real Tier 1 data. However, new press coverage coming out of the UK newspaper The Telegraph reporting a very similar story to yesterday's Der Spiegel article, impacting the market once again, causing risk appetite across the board here in UK and Europe. We did see Bunds come off then at the initial open on Eurex, and it has provided a bid tone in the euro currency, as well as equity markets remaining in positive territory in Europe, led by financials. Again, the article in the Telegraph following very similar to that of their German counterpart at the weekend, suggesting that the likes of ECB's Asmussen, one of the key German officials, could well go against the Bundesbank rhetoric against ECB bond buying and advocating the buying of Spanish and Italian debt. Again, the Spiegel article at the weekend was talking about potentially targeting specific yield levels in which the ECB would come in and start buying bonds. Again, the market taking this on board, and general risk appetite observed across the asset classes. In terms of UK data, we did see the latest in the public finance numbers, which showed quite a big deficit, bigger than some were expecting, but a very muted market reaction. This being because that large deficit number was down to special factors. The fact that they got less receipts than they normally would, particularly in the oil sector, given some of the strike action for the partly UK-owned Elgin refinery in Norway. Taking a look forward then, as mentioned, it's pretty quiet in terms of the calendar, but at the moment we do have a generally risk-on attitude given some of the continued press coverage about the potential for the ECB to intervene in bond buying. However, with the US market quiet, be careful for any headlines that do hit the wires, and in speakers on the schedule we do have one of the voters, Fed's Lockhart, later on in the session. But that pretty much wraps up everything for me for the moment, so I wish you all a great trading day.